I don't think necessarily that it is. It depends on the company you're dealing with. Most semis have some overseas exposure. Broadcom does, certainly, and they also have exposure to Huawei, probably just over $1 billion. So the reason they got hit so hard is because they cut guidance by $2 billion, and the reason they cut guidance so severely is because they were looking at growth. In the first quarter of this year, they came out of the gates booming. Most analysts felt they were being overly conservative given the performance, and they and most of their customers were preparing for a better second half of the year. So you're building inventory, you're selling more. As soon as Huawei ban was implemented, many of their customers across a broad range of industries cut back. So you're going from building inventory for a stronger second half to starting to see, hey, this could be a weaker second half. Let's burn some of that off. So the change was pretty abrupt for them. They're a very conservative company, so they cut guidance, I think, harder than they necessarily had to. They're trying to anticipate things getting worse, and that's why you saw the big decline in revenue guidance for the year.
To that point, do you think that they're using the fact that the trade war is existing and elevating, that Huawei's central to it? Are they using that as cover to downplay and sort of sandbag the estimates?
Well, I mean, their core businesses are still doing quite well, and they're in all the right spots. I'll give you a great example. They have a big chunk of semiconductors into iPhone, and they won a big increase year over year on the model that's going to be released second half of the year. That hasn't changed, and yet they kind of backed off that guidance because they're a little worried about unit volumes. If the Huawei ban causes a retaliation just by domestic population in China not buying the iPhone, they're going to feel it, so they're building that into the guidance. So yeah, I wouldn't say it's sandbagging. I would say they're being conservative, expecting things might get worse, and hoping they don't have to cut again if they do.
Ed, who else does it make you worry about in the space?
Well, that is the problem, because the areas they said they were weak were pretty broad-based. The service providers aren't buying as many. A lot of enterprise, they're not buying a lot of computer equipment. So you're going to see it in Intel. TI is going to feel it a little bit, although they did last quarter too. So it's right now, it sounds like a lot of the big semiconductor consumers out there are being cautious. Supposedly the end market hasn't shown a decline yet, but everybody's kind of treading lightly, seeing how this trade war is going to go and what it's going to affect the second half of the year. If it does go south, you'll see it across almost all semiconductors, which is why you saw the sector sell off today. So we'll have to see how it plays out.
Kourtney, is the share price reaction for Broadcom itself overdone?
Most definitely. But as he sort of alluded to, I do believe that, and I'll use your words, sandbagging. I think that's what they did today. I think they're trying to underpromise and ultimately will overdeliver. If you know, Broadcom actually reports later than the rest of the sector. So many of the other folks had already written down the Huawei exposure, et cetera. And so this is the first time they've been really coming out talking about it. And I do believe they are conservative, and they're likely underpromising and going to overdeliver. At Loop, we cover the name. Currently, we cut our price target on the name down to 310 from 315. Cody Acree covers them for us. But we still have a buy on it. And I do firmly believe that this stock is a name you want to hold and you want to buy on the dip. And we may talk about it a little later.